Okay guys, how is it going today? I'm going to be looking at a coin called EOS. This coin absolutely has 100% of my attention. I do technical analysis on the coins that I'm mostly interested in right now. So I wanted to give you guys the perspective of a professional Elliot Wave technical analyst, and it's my favorite method of analyzing any specific coin that I trade. So let's do a quick count to let you guys get inside of the head of an Elliot Wave trader as he's doing a technical analyst, okay guys? So what an Elliott wave trader does is he focuses on wave counts, okay? And the wave counts can determine the market cycle that we're currently in. And when we also combine it with Dow theory as well, where we can isolate the specific phase that we're in, such as accumulation phase, public participation phase, and the excess phase, okay? So we're just gonna draw some lines here from the lowest to the highest points that we see, okay? So we see one here, obviously, right? We see one here. We see one here. We see also one here. Okay. Are you guys following me? Actually, we'll do it to right about here instead. We see one right here. All right. We see one right here. And we see one right here. Now, we're going to break down these waves even further to give you guys an idea of how these wave counts are done and how they're counted as well specifically. So within the first wave coming up, we can call this wave 1, absolutely, okay? We can call this wave 1, this particular zone, which I will highlight for you right here, okay? That is one zone. This is a second zone that we're in for a corrective pattern. This is not really an uptrend, this is a corrective one, okay? Actually, I'll make that one a different color so you guys know. All right, this is also a corrective phase right here. And this one coming up right here, this is an uptrend. And this one right here is an uptrend as well, okay? Let's draw the colors a little bit better, just to give you guys an idea of what phases are what. So, and this is also a corrective phase right here that we're in. Well, actually, this one was a corrective phase. Now we are actually in an uptrend, okay? Now let's break down these waves even further. Okay, so how do we count this specific wave? We'll actually count the wave right about here, excuse me, just to make it very symmetric. And count with me inside of here, gentlemen. Ready? We're going to count this as the wave 1. So within the wave 1 structure going up, we have 5 waves. 1, 2, 3, 4, and 5. So let's break down this specific wave, okay? The first thing we're going to use is Fibonacci, Fibonacci, Fibonacci retracement tool. I like to break out into little songs every so often. So we know that this one basically just slightly bounced. I'm going to delete them as we finish them. We know that this one bounced at the 618 level, okay? Rather than retracing to the 786 level. So we know market sentiment is actually very, very strong. Now that we have confirmed that this is a bottom here, and how would you have confirmed that this is the bottom? Let's take a look on a different time frame over here, okay? We would have confirmed that this is a bottom by 3 things basically. Actually, just, yeah, 3 things. 1, this is a 55 moving average, okay? The 55 moving average is a Fibonacci number, and that's very powerful. It coincides specifically with these points here. So this is the 0.5 level, this is the 618 level. Notice all these wicks that are poking through it. That indicates bullish sentiment, okay? It indicates that the market is incredibly strong still and it doesn't want to go down to a 786 level. So that is one thing, the wicks poking through it. Number 2 is a 618 Fibonacci level that it's bouncing off of, actually barely touching it. Here it tried, and then here it completely bounced off of it and the 0.5 level as well. And the third thing that confirms it is the wicks poking through the 55 EMA and all of them, okay? So let me say that one more time, guys. 1 is poking through the 55 EMA, 2, the 0.5 and the 618 level that is bouncing off of, and 3, the candles with a long wick to the bottom side, okay? So these are very strong indications. If we actually go to it on the 5-minute chart here, we'll see it in much better detail, okay? We'll see it in much better detail, and we see kind of a lot of resistance here. So this right here would have been a perfect buy signal for people to enter onto a long position. Now, how would you have made a target for there? To make a target, guys, you take your Fibonacci trend-based extension, you go from A to B to C right here, and then you can set targets, okay? This one can actually come down a little bit lower. Let's specify a lower point, say right here to where it actually started, okay? And what we can see, first of all, is it actually hit the 1.0 level, okay? It hit the 1.0 level right here. And not only did it hit the 1.0 level, but if you notice right here as well, it actually is hitting, I'm going to delete this now that we're done with it. If you notice that we actually almost broke the 1618 level. So what we would have done as soon as this specific area right here has formed, okay, as soon as this area right there has formed, what you would do is, okay, I'm going to do that again. As soon as this area has formed, what you would do is you would set a target box, okay? One target would be at the 1.0 Fibonacci level, see one right there, at this price, and the second one would have been a second target right here. And surely enough, they hit those specific targets, right? So now we're done with this particular formation after making this one as one target and this one as a second target. So that one is officially done, and we can call this a wave count 1 right here. We're going to call this a wave count of 1. Make sense? And within these waves here, we actually get 5 subwaves inside of it as well, okay? For example, 1, 2, 3, 4. I don't like the size of the font. Let me change it quickly. One, 2, 3, 4, and this is the 5th point right there. There are 5 impulse waves within a motive wave, okay? Now in one wave in general, there should be 5 waves. Now what is this guy going on right here, okay? I'm going to draw this one out. Now we are in this phase, which I will delete it. This is called the corrective phase, and this is where point 2 ends right there. In a corrective phase, you will always have, so in one phase like that going up, okay, actually let me just go to a clear screen. In the first wave going up and then the second wave coming down like this is how you will get your waves. You will get 5 waves going up, 1, 2, 3, 4, and 5, okay? And then for the wave coming down, you get an ABC correction usually. We'll just simplify it and just call it ABC. It could be like this, sometimes it's like this. If it's like this, where point C doesn't go nearly as far as A, then what happens is it's called a truncated C wave, okay? And notice right here, we actually have the exact same thing here, okay? We have A right here, B right there, and we have C right there, okay? Make sense? Awesome. Alrighty, so that is what we have right now. Just gonna delete some of this because I'm a little bit anal retentive. So we can now confirm that that is 0.5 and the end of that particular wave. Now we don't know that this was going to be an ABC in there, but what we do know is that there's usually 5 waves coming down. Okay, so let's just draw these particular waves, okay? We're going to draw these particular waves and do a quick count on it. Let's get rid of some of this stuff. Even before it happens, like let's say we only saw this point right here, okay? Right there. What we would be doing is we would be drawing a wave count like this as it comes down. So we can time our entries. Okay, count with me guys. 1, 2, all right? This will be kind of 3 right here, we'll call it. This will be 4, and this will be 5, okay? This one here just ended up making like a diagonal coming down, right? It made a diagonal coming down like this within this particular wave. So we would actually end up labeling it as this right here. We would call this one coming down 1, 2, 3, 4, and this point right here where 3 ended is 5, okay? And this is basically a flat that is coming down, and that's the wave count. So we have 1, 2, 3, 4, and then 5, with wave 3 right here being the longest wave. But within this particular wave, we actually ended up getting 5 subwaves within waves 1 to 3. Okay, that makes sense? Okay, now that we know that this is the bottom after 5 wave count, we have to analyze the one coming up. The ones coming up always have a 3-wave corrective pattern like this. 1, 2, and then 3. As soon as this one formed, we know it's A. As soon as this bottom formed, we know it's B. As soon as this one formed, we know it's C. So this one would have been a really good entry point. And the reason why it would have been a great entry point is because we take our Fibonacci retracement right here, okay? We take our Fibonacci retracement to the point that it began, and we notice that it's bouncing right off of the 0.5 level. Not only did it bounce off of it, but we got this beautiful candle called an inverted hammer, okay? This inverted hammer shows that the bears have tried to push it down, but the bulls have successfully defended and they rejected it by pushing back up. So on a 30-minute candle, this one right here would have been the perfect entry point. As soon as this candle formed right here, okay, if the next one was a green candle and it closed above it, you would have put a stop buy slightly above it right here. And after you put a stop buy slightly above it right here, if the candle successfully closes above it, boom, you're in a trade. And you know that this is the first wave coming down, and you know that this is this is A, this is B, and this is C over here, right? So like I mentioned earlier, for a wave going up like that, we have, coming down for a corrective wave, we have waves A, B, and then C, like this, okay guys? Make sense? So what you would have done was try to look for this particular location for the ABC wave, A, B, C, which indicated that it was indeed A coming down here, and this is B going up there, and that's C going there, obviously, okay? Does that kind of make sense to you guys? That is basically how we count the Elliot wave, okay? Okay, now that we confirmed that this is ABC, do you know what? I'm going to go over it one more time with you guys, because I think I'm going over it incredibly fast. I want you guys to know the wave count and how Elliot Wave professional traders use technical analysts by counting waves, all right? So we don't know that this has formed yet, but what we can anticipate is an ABC correction. We know that ABC will come somewhere like that, down. So what we're going to do, first of all, is count these waves, right? Basically just 1, 2, 3, 4, and 5. Within these waves, we actually get 5 small subwaves, okay? We get, and it's called a flat the way it's coming down, or in a channel, 1, 2, 3, 4, and then 5, okay? That's how that one would pretty much end up looking, just like that. And this makes kind of a channel coming down, if you guys notice, right? It definitely makes a channel on a higher time frame. This particular area just shows a wick, so it just looks like that. So we have 1, 2, 3, 4, 5. Now that this one has officially formed, and we count the 5 waves, we draw a line through it from where that point ended, and we call this one A right here. A, okay? Now we are looking for an uptrend to count 3 waves. So in an A wave coming down corrective, you will have 5 waves. In a B, you will have 3 waves. So 1, 2, and 3, and boom. As soon as you know that it reached the B wave up here, we can just draw a line through that right here, and then we can draw this as B. And I would have shorted it right up here. How would I have known to shorted it? Well, I would have seen this massive candle right there of rejection. Probably R size or high as well, I was just going to say. Perfect opportunity to short right up there. Oops, sorry, I meant over here. R size still very high, so you could have shorted it temporarily until it reached the C zone. Now, what is this hot mess? Let's draw on the 30-minute chart. Okay, hold on, I just want to check the price that it's at right now. Not bad. I entered a position around 975, so I'm pretty happy about that. a long position because we're on an uptrend right now, guys. Okay, so now that we're done that particular area, I'll delete it. Now let's count the waves coming down. Okay, guys, 1, 2, 3, and then 4, 5. Do you guys see this right here? 1, 2, 3, right? This one was a little bit weird. This was an ABC correction right here, actually. So this would have been an ABC correction right here. Within the wave coming down, it was a this is actually looking more like a 3-wave correction to me. Yeah, sorry about that. I just paused it for a second just to figure it out. Okay, so this one here, sometimes when we have irregular patterns, right, where it doesn't come down specifically like that, we can assume just based on the counting of it. So let's count these waves. Okay, do you guys see this count right here from low to high? Pretty much. It's hard to miss this, right? So what is this particular count right here? Well, it kind of forms a channel, right? It kind of forms a channel like this. So this particular count would be an A. Actually, I'm going to delete this to get the actual text in there. So there's many different variations of waves that happen. But as soon as we count specific ones like 5, A, B, C, D, and E right there, okay? A, B, C, D, and E, which is still 5 regardless. It's an A, B, C, D, E correction instead of a 1, 2, 3, 4, 5. That is how you officially know now that this particular wave is done, okay? So now we can call basically this one big wave right here 2, okay? So this is your A, B, but this is also your 2 that has now just finished, where C also ended. See, A, B, and C, but wave 2 has also finished. So we're going to call this 2, okay? Now that is where we are currently at. Does that make sense to you guys so far? I know it may not make sense. So let me just try to make sense of it for you guys. Okay? So basically what we have, I'll just keep this line purple actually. Okay, so we have this right now. We have 1, and then we have 2. And then within these waves, we basically have this kind of structure. Okay, we have 1, 2, we have 3, and then 4, and 5. And then we have a somewhat structure like this. You know, we have an A, and then we have a B, and then we have a C. That's the count for Elliot Wave, okay? Okay, now that we're done with that particular one, we move on to the next structure, and we try to analyze this. That is, I know it looks like a mess, right? But that is what Elliot Wave traders do. Okay, now let's look at this specific structure right here. This one right here. What is this particular wave? Okay, sometimes within a wave like this, for example, you have 5 waves, right? But then also, sometimes within a small wave, this one, you also have 5 waves like that. Okay? And you might even have 5 waves like this, for example, inside of these ones. And just like this one as well. All right? And then you still have your ABC correction like this. You have your A, B, and C, and then you have your A, B, C. And sometimes inside of, you know, all of these waves, you can also have 5 waves as well. And it's really hard to draw, but I'll try to give you guys an idea, okay? If you zoom in on it really, really close, you can see. So within each wave, there can be multiple waves. So what I'm going to do is actually draw it on the most possible detail for you guys as well. We know, first of all, that the first wave is X amount of strength, right? But we know that wave 3 is going to be much, much stronger than it. Now, some possible variations are like this. You can have 1, 2, and then of course 3, and then 4, just 5 as an example, okay? And then in the first wave, like I mentioned, you can have 1, 2, 3, 4, and then 5, and then you can also have 1, 2, 3, 4. Don't mind the angle. I know that the angles are off, but it's just to give you an idea. But because we assume that wave 3 is the absolute strongest wave, it's stronger than this particular wave, we can use that as a general basis for assumptions, okay? So basically what we have right now is wave 3 going up. I'll draw it on the side over here for you, okay? We have wave 3 going up, but right now what we see is this point to this point right here. So we see this, and we see this right now, and we see a massive uptrend like this, okay? Now, what we can assume is that this one will be, say, X amount of strength, all right? Let's make it more slanted so you guys can see. And we know that because this one did not correct much, this one is going to correct a lot. Okay, guys? It's going to correct a lot. And then we go back up again. Now, let me give you a basic understanding of how Fibonacci levels work for here, okay? So let's say that on the first wave up, okay, the first wave up, and it only corrects 382 for Fibonacci. Because there was a lot of bullish market sentiment to go up, and it did not correct a lot, what it means is the wave 4 correction will correct, you know, possibly between 0.5 and 0.618, okay? Usually bouncing off of the EMA. But if this one actually corrected a lot, to say 618, okay, then that means that this particular wave right here will only correct to about 382. It's the opposite of each other. So once again, if this one corrects 618-ish, or even lower, this wave 1 has a possibility to go all the way up to, say, 99% of it. If that one corrected a lot, for example, even more, this one would probably barely retrace. So that is the assumptions that we make. I'm going to delete some of this stuff now that we're done with it. So let's get into this. Okay, so once again, we are on this particular wave. Like I mentioned, that wave 1 going up, we can have 5 subwaves inside of it, okay? And if you count actually right here, you'll notice the 5 subwaves right away. 1, 2, 3, 4, and 5. Okay, guys? Cool, right? And then now the next one, I'm also going to draw it on here for you guys to see. Don't mind the angle once again. 2, 3, 4, and 5. So what we can expect next is an ABC correction like this. A, B, C. Okay? Something like that. And let's see if we actually get it. Okay, surely enough, we get the ABC correction. Boom. Now we are actually officially done it. And we know that this now is basically subwave 1 finishing it, okay? We'll just call it 1 like that. Notice that this one is in bracket, all right? Notice that this one is in a bracket, which indicates a different cycle. We'll call it the primary cycle. But because this one is not in the bracket, it's a different counting, okay? It's the first wave of the 5 waves going up. So we are done analyzing this part right here now. So this is now wave 2 that has just finished. And how many more waves do we have, guys? We have a lot more to go. So that's 1. This is wave 2. No. Fuck, sometimes the charts are weird, man. There we go. So that's 1. That's 2. Okay. Makes sense to you guys? I know it doesn't make a lot of sense because this is yeah, it's honestly on a very different level than what normal people trade in the market, right? So when you're looking at it from a very professional perspective, you incorporate a lot of many different ideas. You incorporate fundamental analysis with technical analysis, but you analyze it from a whole new level in terms of experience and skill, right? So I'm not downplaying the way other people analyze it, but I'm letting you guys know that as a technical analyst who does this for a living, and what professionals do is they will definitely take this wave of counting into consideration, but it's not the only way to trade, guys. It's definitely not the only way. There's many different ways to trade as well, okay? So now we are basically gonna count this as wave 3 going up, okay? You can't really see the different subwaves in it because it's incredibly strong, but we can definitely break it down like 1, 2, 3, 4, and then 5. So in this particular one, we'll call this one 1, 2, say 3, 4, and 5. And you can barely see a correction there, which is kind of sad. So we can call this one wave 1. We can call this one wave 2. And then we can call this one wave 3. And then 4. And then 5, basically, okay? Now we're going to look at the magnitude of this one and see if it's about equal to this one right here. It overshot a little bit, so I'm going to actually discount that because I don't like it when my Elliot waves are not proportional, because wave 3 has to follow the rule that's the strongest one. So I'm actually going to call this one my 2 correction, and then this one I'll bring it down right here. And now I want to see if it's a little bit better. It should definitely be very proportional. Fairly proportional, I'd say. Happy enough with the way it's counted. I'll take that one. Okay, so now we can call this basically wave like that, okay? And this one will be wave 1 inside of it. This one is going to be wave 2. This is going to be 3, 4, and now this completes our 5th wave, okay? 5, not only does it complete our 5th wave, but it also makes our primary 3 wave, okay? So I know it looks like a hot mess right now, but this is your wave 1. This is your wave basically 2 right here, sorry. Let's zoom out on a different time frame. Okay, this is wave 1 going up. I'm going to delete these ones on the side here. It becomes very messy, but you get used to it over time. And of course, it's really important to keep it clean as well, okay? So when you're charting like this, very important to have it clean. But the only reason I'm doing it with a lot of detail is because I want you guys to know exactly how it looks as we're doing it and analyzing it in real time, okay? So we're going to clean this up and show you guys how it actually looks like without all of this mess. Usually you'll save different templates, and that's important. Just bear with me for a moment. Okay, there we go. Now it looks a lot cleaner, right? We have 1, 2, and then this one is 3 up here. Make it a big one so you guys can see that. All right. Now that we cleared that up, this is 1, 2, right? And then 3 was somewhere right there, 4, and then 5 skyrockets. Okay, now where are we? We're gonna draw a line since now we have the original count done already. I'm just gonna stop the video and delete it. There we go. Okay, now let's draw a line. I don't like this color. I actually want to draw it different color. So that's 1, that's 2 right here, okay? And now we are basically on 4 still right here, right? Like I mentioned, because the wave 1, actually we'll just call this wave 1 right here, sure. Let's see how much it retraced. Well, it retraced only 0.5 about, right? Which is actually no, I started at a different point right here. Now we'll say 0.5, barely 0.5, almost 0.3. So because that one, like I mentioned, retraced only 0.3, this one should actually retrace a lot more. And we're going to draw our Fibonacci in here. This is a mess. We're going to draw our Fibonacci in there and see how much this guy retraced. And surely enough, we see it kind of touch the 618 level, right? We see it touch the 618, well, not even, it barely touched the 618 level. So the market sentiment is really strong right now. It actually started from right here, like right where it started pretty much. We'll say right here. What we do notice is that it barely even touched it, okay? So look at this right now, guys. See, notice what I'm talking about? This candle right here It indicates the reversal candle on a say a 45-minute chart. On a 1-hour chart, this is basically an indecision from the market. Let's see if we can find a better candle. See, notice it's a really small green candle, but that is basically like a doji, and people just don't want to sell it right then and there. So we know, guys, right now that we are on wave 1, 2, 3, and this one is about to make wave 4, okay? This one is about to make wave 4 coming down. And what we want to do is find the bottom here, and then we want to catch the final wave before the big correction starts. And we can use actually targets, okay? We can use targets to see where it is. So let's say we use Fibonacci trend-based extension right now. Fibonacci trend-based extension, and we went to right here. What we notice is that it completely shot through the 168 level, and then it almost attempted to go to this 2618 level. So now the next wave that what it's going to shoot for next is most likely this range right here. Believe it or not, it's shooting for $1.49 right now, guys, for the 5th wave going up. That is our next target right here. Makes sense, guys? And we can even confirm it by using trend base from just wave 2 to 3 right here. I apologize if this is actually overwhelming for a lot of people. I know that it's very different analysis than what you guys might be used to. So yeah, so if we took it from wave 1 and 2 and did our Fibonacci trend-based extension, we shot through 618 there, or 2618, and we can shoot for 3618 here. So that's one of our targets. But if we started it from where wave 2 ended and went to 3 and then to 4, we can shoot for a 1-to-1 target. Therefore, we take a target range between both of them. And our next target that we're going for is actually $1.50 and $1.57, somewhere right between there, guys. And no, this is not me just creating hype or FUD. This is what the charts tell us, okay, guys? Now, what's really important is to take a look in here at what's going on. Let's take a look in there on the 5-minute chart, okay? What we want to do, first of all, is delete this, draw what we see. Let's take some trend lines that we see right now, okay? And what do we see? We see almost like a wedge, let's say from this point, discounting the wicks, okay? You don't ever want to count the wicks as a resistance because you don't want to do this, okay? It doesn't give you an accurate idea of where the actual resistance and supports are. You want to do this because this acts as a resistance. It tries to poke through it, but it was rejected and it comes back into this zone. And what you also want to do is constantly keep drawing to where the EMA is, okay? So for example, if you only had this point on right here, you'd want to draw your resistance to right there. But now that we have this bottom forming, you want to draw your resistance to where the 55 EMA is. Okay, now that we have drawn that, we can also draw a resistance right here. Okay, do you guys see the resistance or support, I mean? What do you guys notice? You guys notice a falling wedge, right? This is what a falling wedge is. Okay, and it makes 5 touches, 1, 2, 3, 4, 5, and then it breaks out. How high does it break out? Let me show you. So 1, 2, 3, 4, 5, and then it breaks out. We take the base range of the wedge. We take this particular range right here of the wedge, and then we use that as a target by cloning it and moving it over. So that is where our first target is going to be. Does that make sense? So let's say I took this wedge right here, this range. I'm going to use my long tool, if I can find it, right here. And then I'm going to just simply move it over. See, I'm taking the base range where the green is, the green to green area, and this is my risk to reward right here. I entered a trade on the breakout about right here, okay? And my target is going to be a 15% increase for whatever I put in with the risk to reward ratio of 3.89. And my stop loss is around $9.50. Yeah, my stop loss is at $9.50. And I'm shooting for a target of about 114 first, okay? So let's see if we can actually count some waves in here. 1, 2, count with me. Okay, this one is a consolidation area still, so we're not going to count it. 1, 2, 3, 4, 5, right? Or you can even count all of this area as 1 right here. This whole area is 1. But either way, what we get is we do get this, and you guys would agree. I'll use the 1, 2, 5 one to make it easy. Here's where it started. Here's basically the 1 area, all that whole area. That's 2, 3, this is 4, and this is 5. So are you guys surprised that there's a breakout? I'm not surprised at all because that was incredibly expected based on the counting of the waves. So this is the example. If it was a bullish trend, so a falling wedge is bullish, and a rising wedge, okay guys, like that, is bearish. And the count is 1, 2, 3, 4, 5. Sometimes a throwover will occur because they want to trap you, and then it comes downwards with the same base range. So this is exactly where we are right now. Okay, it looks like they're dumping a little bit, but not too worried at all right now about it. This is the wave count, this is the target, this is the previous resistance, right? That is now an actual support. So what we're doing right now is pretty much this. We are in corrective phase, okay? We are in corrective phase right here, and like I mentioned, for every wave 2 and every wave 4, this is the pattern that you get. You get an A, you get a B, and then you get a C pattern, okay? Something like that. So what this one is basically trying to do right now is do a corrective ABC pattern like this. So we have the 5 waves coming down, okay? And then we're basically going to get 5 waves going up here, which is fine. So watch this count. It's going to blow you guys away, okay? So let's call this A. This will be B somewhere, and then we'll get a C somewhere well over here. This consolidation will take a while because it was such a strong one. So let's try to count together, okay? Within this wave, we should have 5. So we're actually going to get 1, okay, 2, something like this, I'm guessing, off of the resistance line, 3, and 4, and 5. So a lot of people are really worried right now, but as a trader, or professional trader, I know that I'm not too worried because this is the count. A, B, guys, C. Following with me? Right? And then this one here should have 5 waves going up, 3, 4, and 5. Let's move it over just to make it better on the time frames here. Okay, see that, what I mean? And then this one will have 5 waves as well. Well, it should have an ABC correction, right? It should have an ABC correction like this. A, B, and then C, okay? And then next coming up, we're not going to get that high, trust me. Based on the strength of this wave, it's actually going to be more like, it's going to be tiny. This particular wave is going to be tiny, just based on the strength of the first wave. So don't fret, we'll get there, just not anytime soon. So this is more realistic right here of how it's going to be. Okay, there we go. So that's A. Hard to see, right? See? That's how it is. So wave 1, and then A, B, C, and then we have wave, which makes wave 2. And if we look on a lower time frame, I bet you the RSI is incredibly low already, and I do expect a bounce off of it. This is just the way waves are counted, guys. And when waves are counted precisely like this, it's very easy for us to predict the market. People will say that technical analysis won't really play a big part into this, but I disagree, okay? I disagree entirely. This one has a chance to retrace all the way up to about right here. So I'm going to draw a horizontal line just to depict where the wave originally began. And we're going to watch it in real time as well, okay guys? If this actually ends up retracing all the way to here, we're going to get a complete reversal. But this is where the wave 1 began. And I'm going to show you guys the Elliot Wave handbook, okay? within motive wave, wave 2 never retraces more than 100% of wave 1 and never retraces, and wave 4 never retraces more than 100% of wave 3. Okay, so what that is basically saying is that this yellow support line that I drew right here, guys, it will not, because this is a motive wave going up. Okay, this is wave 1, 2, 3, 4, and then 5 going up right there. That's the motive wave. We can start to see a hammer develop already because the 1 minute, bet you anything that the 1 minute RSI was really low. Okay, see, that's how I knew. It's really low right now, so what the market will do is they will buy it, and then what will end up forming is a hammer. Okay, I'm going to show you guys what a hammer is. A hammer candle on the downtrend is this right here, which indicates a reversal for the downtrend. Okay, inverted hammer can happen as well. Okay, here we go. And it doesn't matter if it's red, guys, or green. Get it out of your heads that a green candle is not always bullish and a red candle is not always bearish. It is circumstantial, and it really, really depends on absolutely where it is. Okay, so yeah, so if you get a hammer on a downtrend, for example, let's see if we can find one right here, a bullish hammer. Once you get that, what it means is the bears have tried to push it down, but the bulls have pushed it back up, creating a hammer. Now we're going to watch this in real time as well, guys. Okay, see this hammer? It's got 2 more minutes. The 1 minute RSI is really low. A lot of people are going to panic right here. See, it's getting a higher one already. Volume is slowly diminishing. People don't want to sell. On the 3 minute chart, it looks like that, but on the 5 minute chart, people will buy it up. Trust me, guys, people will buy it up. It is just the psychology behind trading. Okay, so what we're most likely going to get here is, so we got 5 waves going up there, right? And then on this wave, we actually have, we'll have 5 waves as well. Let's say we move this one to over here a little bit. On this particular wave coming down, we will have 5. 1, 2, pretty much, we'll call this one 3, 4, then 5, okay? And then from here, going up from A to B, we'll actually have 3 waves, A, B, C. Notice that? For this one, we don't see it, but let's go in a different time frame so you guys can see it maybe. They're all red, but let's see if we can see it on a 1 minute. There we go, we see it here. 1, 2, very, very hard to see. This is called a sub-minuet wave, basically the smallest ones possible. Okay, 1, 2, 3, 4, and then we'll most likely get a small fifth right there, or this could be the bottom already. If that's not the wave count, then this is right here. 1, 2, and then this could be 3 right there, this could be 4, and that could be 5 right here. It satisfies the rule very well, where wave 4 does not retrace into the territory of wave 1. So that one actually looks dead on as well. So let's just keep taking a look at all of these waves and see what else we can come up with, okay? So let's see on the 5 minute chart how that candle is looking that I was talking about, the hammer, right? Here's the hammer that is just about to close. The 1 minute one is really, really low already. It's just going to skyrocket up here very, very soon. So now that we know that this is wave 1 going up, and we broke down all the way to wave 2, which has substructures A, B, and C right there, okay? Then now we know that it's going to go up to 3 very soon. Maybe not with that much strength, but what we do know is there's going to be 5. So let's take a target ratio of 1 to 1, okay? Whoops. Target ratio of 1 to 1 using Fibonacci extension, and let's see exactly where we could possibly end up if it hits right here only. Okay, perfect. So this is basically where our target could end up. The next target that this one's likely to hit is a 1 to 1 ratio. It'll most likely end up bouncing to almost where wave 1 territory is, but not quite. And then the last one will probably hit a 168 level. And that is basically going to be where it retraces up to. We can even confirm it as well by taking Fibonacci extensions from the low to the high. And surely enough, if we go to right here, it is exactly in between 0.5 and the 618 level of Fibonacci. So what happens after this finishes, okay? After this finishes, we're gonna delete a bunch of shit because it's getting a little bit messy here, okay? Now that we know, and I've counted the waves in there for you guys, you guys should get an idea of what wave count we're in. So let's take our Fibonacci extension. Okay, so we hit 618. After we hit this one level that I was identifying, we have to still get our A, B, C, because this is A, that's B, and this is actually C right here. Or sorry, B and C. Make sense? So A comes down to here where the 5 waves finished. Okay, and then B comes right up here to the 618 Fibonacci level from this particular wave, and then wave C will most likely, actually it could come all the way down to over here. But let's assume that it finished at A and it actually went to B. What we would do is take trend-based Fibonacci extension, right? And then we would do this as a one-to-one target. And surely enough, it ends up right around the 718 level. Because remember I mentioned that wave 2 barely retraced, almost 382, not even. So because that wave 2 didn't retrace a lot, what ends up happening is I know this is a lot of information, guys, but I'm not going to do a technical analysis from the perspective of what you guys see on the internet all the time. And to me, they're very, very basic analysis of using typical trend lines. I don't even look at cup and handle, guys. Like it's a pattern I don't even consider in my book a cup and handle, because it's anything can be viewed as a cup and handle, guys. You know what I mean? Anything could be viewed as a cup and handle. It's like fucking retarded cup and handles. If you guys want to get into some more advanced shit, this is the kind of analysis that you should be looking at. If you guys like the way I'm analyzing from this perspective, follow me on Twitter. Look at some of my YouTube series, like my YouTube series for technical analysis on Amize Go, on ETP as well. I created a small video series starting with $200 where I traded live for a fairly long time and for 16 days. And I wanted to show people how you can turn $200 into $1,600 in 16 days. So check out that video series too if you like. So we're not doing too shabby right here at all. This is the expectation. Whoops, right here. Where is a good buy zone, guys? Where's a good buy zone? Well, a good buy zone from a 1-to-1 ratio and from the 618 level as well, probably be anywhere right here is going to be my buy zone to go long. Right now I'm in a long position waiting for it to get to B still, but a good buy zone would be a target ratio of 1-to-1 here and also 618. Now, I know a lot of you guys have asked me to simplify my analysis. I'm sorry, I simply can't do that. This is the way I analyze. I'm here to teach you guys different methods to analyze from a higher level than what you would normally see, okay? I'll try to explain it as best as I can, but if there are some things that you guys don't understand, it is up to you guys to go on YouTube to try to understand some of the terminology that I'm using, right? And you do have to admit, there's no analysis like mine online, right? It's really rare to find patterns, to find a trader who will actually share their insight on what they do from a different perspective like this. And we will actually get into some harmonic patterns in the future as well, where I will be incorporating it into my analysis for YouTube. So once again, why is this a really good number here? Okay, well, first of all, this is the 618 Fibonacci level from point 2 to 3, okay? 618 Fibonacci level. And this right here, the 1.0, is your Fibonacci extension from point 3 to point A to point B. So we take a range between 1.0 to 618, and that is how we get our buy box. So a good entry would be between 76 cents and 931 cents, okay? Now let's take a look, guys, at that candle that I was talking about earlier. See, it formed the hammer. It formed the hammer that I was talking about. Do you guys see that? Formed the hammer, absolutely, okay? And now the RSI is probably just about to round. Notice right here, you can't see it, but this next one is higher than it. It takes a really trained eye to see it, but you can actually assume bullish divergence already, okay? This one will most likely just end up curving like that, and then it will go upwards. We look on a 3-minute chart even to confirm, right? We're almost a bullish divergence already, okay? Do you see what I mean? It's upticking. Look on the 1-minute chart, right? Lots of volume right here. this volume spike confirms that there's very, very strong support. We look on a 15-minute chart. The only thing that's going to happen in this 15-minute chart is this is going to form a hammer. It's going to form a, oh, actually that one formed already. We're right here. Okay, we could even form a one white soldier. This is a one white soldier. A one white soldier will be something like this, okay, where you get a higher high and a higher low than the previous one. And this one almost, not quite there yet. People are still undecided in the market. We're getting, all right, so see, we're getting some green candles that are ticking a little bit now. The 5-minute one still looks like a good candle. This one, we might not be done yet though, because when we do the wave count itself, we didn't exactly get 5 yet. Here's 1, here's 2, here's 3, and here's 4, and we should get a 5 right here. But we still follow that Fibonacci or the Elliot Wave rule that it will not go lower than this point right here. And this point right here, if you guys actually notice, okay, see, I'm gonna make this one tealish. Watch, this is teal. And also, this is where wave 1 began. This one right here. Okay. Notice that the teal one, this one, and the horizontal support, that indicates a buy region right here. It indicates a buy region from everything that I see. So we have wave 1 going up. We have A, B, C to make wave 2 going down. And I'm actually just gonna keep the video here to see what it looks like, all right, for you guys. 1 minute RSI is probably extremely low, right? Extremely low already. It's just a matter of time before people realize that and it bounces back up. So we're just gonna leave that, put that on hold for a little bit. And so once again, this is the wave 4 coming down right here. Wave 4. Well, actually, this is not wave 4. This is wave 4 over here coming down. So we still have a ways to go down, okay, guys? Still a ways to go down. So don't forget that. Please, please, please don't forget that. This is a good opportunity where A ends to go long. Very good opportunity to go just to about B, small short-term targets. And then from B, I'm going to short it and then go all the way down to C, which will completely end it right here. Then sometime on November 2nd or so, assuming we get the same strength of waves as well. Actually, you know, if it was the same strength and the same angle, you know, we can go down to over here or something like that. Right here. So we could be looking at November 3rd, November 2nd, late November 2nd. And that is exactly where we are right now. So let's assume, actually, I think I might have done my targets wrong. Let's assume that it actually went to somewhere there. Now we're gonna try to find our long-term targets. We're gonna try to find our long-term targets using the same Fibonacci extensions. I might have done that already actually, but I'm gonna do it again quickly. So from 2 to 3, just like that. Okay, so from 2 to 3, if it went down there, our first target will be a 1-to-1 Fibonacci level right there. Okay, that could be one level. Now that's 1-to-1. So that's actually a really realistic target as well. So I'm gonna actually make these as my buy zones right here. Okay, this is gonna be my buy zone right here, and this is gonna be my sell zone right up here. So these are my short-term targets just for the next few days. And ladies and gentlemen, that is how we analyze Elliot Wave and do technical analysis from this kind of perspective. So I hope I gave you guys some insight. And I'm going to be very clear once again that we will downtrend to 75 cents to 93 cents, which will be a good buy zone opportunity to go long. And then once we do this, my bad, I will drag this down here. This will be our wave 4 right here. Okay. And then we will finish our wave 5 going up. And then once we finish wave 5, if it hits that particular area right there, okay, if it hits that particular area, this actually completes our official first wave right here. And then what we will expect after that is a major correction, which will come all the way down to the 618 level again possibly, or even the 786 level between 75 cents and 92 cents, which I will indicate for you with a red box. Now, those who follow me on Twitter and see my other technical analysis, you guys know how on point I am usually with my TA, because they're constantly updated every single day, right? As we get new information that comes in, we constantly update with our Elliot Wave theories. And of course, some of the times they're wrong, but most of the times they're right. Now, being a good trader, you have to be reactive rather than predictive, okay? So when you're reactive rather than predictive, it's much better in the long runs. So when new data comes in, constantly adjust what's going on, right? And then we go from there. So I will see you guys in a bit, and thank you for tuning in. Oh, I wanted to actually come back here to let you guys know the reason why it's retracing very far right now is because right now, as we speak, while I make this video, Bitcoin is actually rallying to about $7,000. We're currently at $6,945 right now. So this is why there's a good chance that it might retrace a tiny bit lower than here. But on the 5-minute chart, we see another candle, which still makes a 1, 2, 3, 4, 5. And we're still going to be on our way to wave 3 here when that finishes, because people are starting to slowly realize, see what I mean? That it's going up there. So when Bitcoin starts to rally, you guys can expect all coins to take a little bit of a dip, all right? So don't be too worried about it. We are still going to make our way to the wave B. And then after wave B there, we are definitely going to be making our way to target C over here for sure. So thanks once again for watching.